Good morning. I hope my OBS is working. Check, check, check. I think we're all right. Hang on one sec, Steven. I got my stuff is all muted here. You there? Steven's still muted. That's all right. Anyways, morning. I think we are live. Let me just post this real quick. Just in case. Two seconds, guys. Da, da, da. Getting set. All right. I think we're getting ready. Cool. Oh, geez. Sorry, guys. Y'all had jumped in a little early. In case we start to go, and can you guys hear me? Just in case, you can tap in the chat. Audio check. Let me know. Anyways, just in case, I'm watching Spy right now. My level today is gonna be 382, and we're real close. So I'm just putting that out there. Cool. Thank you, Mash. Appreciate you. And I think we are good. Steven, I don't know if I got the audio for you today. Shit. Well, I still love you. You're still muted. That's what it is. All right. Well, I'm just going to do this really quick. Let me get to the view. I am working remote, so I don't have... what's that called? I don't have the, you know... regular setup, so no video. And man, I really hate Excel sometimes. Why does this not go? View. Slideshow. Holy camoly. Well, if I can't get this slideshow to go, then I'm just gonna move it over. One sec, guys. Oh, never does this really happen. Slideshow. I lost that stupid. Oh well. Looks like I don't have it. Well, anyways, I'm just gonna pull this over here. Hopefully you guys can see this. Oh, you know what it is? I can see it. It's just doing the wrong. It's doing the wrong screen. I change that. Screen. Oh, I guess it's a OBS thing. Crap. Here, you guys will switch. All right, there you go. Hopefully that's good. Love the morning hiccups every time. Mondays just throw me off, man. Until I get this done, it's like I really can't. I feel like I can't move forward on a lot of stuff. Gotta move my windows around now. Cool. All right. You're muted in the Zoom call. Yes, I am. Oh. Here. Unmuted now. Anyways, all right. Just gonna get started. Sorry, guys, for the shenanigans early. But again, we're gonna go through basically just the weekly trade plan. If you're not familiar with what we do here, it's like every Monday we kind of go through and take a look at what is major from last week that hit the headlines that we need to be watching out for this coming week, and what are some major market moving events from an economic perspective that we need to be aware of as we're trading throughout the week. We'll lay out a couple things. We'll mostly go through the indices and get some key levels that we're looking for. Steven, I can see your chat. I mean, if you're typing there, that'll probably work. And usually, Steven, I'll get to be able to come on and then he'll pull up some SPY levels for you guys as well. So I know we're kind of actively in a couple trades. I closed out just because, you know, Mondays are like so crazy for me, but I know we're short Tesla. Most of the guys are short Tesla right now, and that's still going. So if you're in it, congrats. That's paying, and good job. So before we get started, just got to point out, you know, standard disclaimer stuff. Options are not for everyone. We are an options trading group. So if you're new to options, call 1-888-OPTIONS before you start trading and to get a copy of characteristics and risks of standardized options. In general, you should carefully consider whether trading is suited for you, considering your financial status and all the other stuff that I'm supposed to say that I forgot on this beautiful Monday morning. Man, it's hot over here too. All right, so I'm just gonna jump into some of the headline stuff here. Really, I think some of the biggest points last week. I mean, consumer confidence at 16-month low. That's still pretty. It's pretty brutal. I think generally speaking, what I saw on the charts really was. I just kind of feel like that was priced in quite a bit, if that makes sense. We have gotten a bounce, like a nice little bounce over the last couple weeks, but we'll see how long that actually stays. You know, it's one of those things where we're in one of those kind of bearish markets, well, a bear market for sure, and the rallies will be pretty violent off the bottom. So guys, just be really careful if you are taking long trade or trades to the long side. Just again, be prudent in terms of taking your profits quickly. I mean, that's the biggest thing I could say. It's a counter trend move. It's good. You can make a ton of money. Don't get me wrong. There's nothing wrong with it. It's just, you know, from my personal experience this far, I will tell you that, you know, my contract selections have been having to change a little bit, and my profit targets are definitely becoming a lot smaller than they typically are. In general, it's so hard to find, you know, like a 2 to 3 day trend in this market in general. So just be very, very cautious. We are done with the first half. So if you guys are stratters, there's a lot of things that you'll start to look at, like full-time frame continuity. Just as a heads up, you know, we started a new month, we started a new quarter, we started a new second half of the entire year. So all the charts, they have a potential to actually reverse. So just be aware of that. The trend is still generally to the downside, but you'll see a lot of things, you know, green on the month, green on the week. Well, it's early in the month, it's early in the week, it's early in the quarter. First two weeks of the quarter, a lot of things can change. But seasonally, we're going to start to get into actually a fairly strong season. Hopefully, the worst of the downside is behind us, but we still have all of this inflation stuff in front of us. So that will continue to be on the forefront of most of the headlines, and we still need to be really cautious of that. So anything that has to do with inflation and interest rates, always going to make major headlines and going to move the market. So just be super aware. This week we have some pretty big headlines for economic data that we do need to be aware of. I think it's going to be like hump day, right? So we'll have maybe this little trend today, tomorrow, and then hump day. Just, you know, watch out, right? Because there's a lot of stuff coming down the pipes. A couple of things to note. There was EPA legislation. I think I forgot what SCOTUS stood for, but there was some oil news. I'm still looking for this bounce in oil right about here. Actually, I'm looking for commodities to bounce as well. Typically, in this type of market, uh, people will do the flight to safety is the trade, right? And you'll see a lot of gold. We used to see a lot of gold. You see a lot of bonds kind of racing. It's not so much that bonds will go up, but in this situation, it's a little bit unique. So rates are going down, have been going down. The bond market itself, it anticipates what the Fed is going to do. So those might, just like a stock, right? Good might do go a little overboard in anticipation of what the move is going to be. I think we got a lot of that out of the way. You can start to see right now some of the bonds, if you trade like TLT, things like that, starting to bottom out in base. And with Powell's 75 basis point rate hike last month, I think that really is going to set the tone for the rest of the year, really. 75 basis points is expected again this month, so just a heads up. I think that we can go into the CBOE Fed Watch tool. I didn't today. Might be a good idea, CBOE. So you just search CBOE, and I'll just do this, right? CBOE watch interest rate, right? And then CBOE Fed watch. It's a pretty cool tool. If you guys aren't familiar with this, there you go. It'll show you at any given time what the market's actually pricing in from an interest rate perspective. Ooh, look at that. So we are at 1.5 right now, and this is saying hey, look, 93% probability of having a 75 to 100 basis point hike, mostly on the 75. If you go 250 to 275, that would be 100 to 125 basis point hike. So right now, market is currently pricing in that we will continue the status quo at about 75 basis points, which I think is pretty prudent. I did see a couple things. So the China trade has been on a tear the last couple weeks. So if you guys are in that, just a heads up. I did see a headline this morning. Actually, it was this weekend. The biggest thing for the China trade was that, hey, look, the government has not been involved as of this weekend. So Sunday, they're starting to get back into the mix. So just a heads up, if you're in some of that, be careful because some of the concerns might be coming back into the market. Personally, we might trade some BAVA or something like that to the short side. I know my buddies hate it, but they've been doing pretty good actually. And again, remember, so New York Fed Williams committed to 2% inflation target. This is going back to that inflation thing. When we talk about that stuff, we're going to look at CPI, and the Fed's target is 2% inflation. So I believe we're at like 7 or 8, something like that, something wild, right? And we need to get to neutral. So as rates go up, right, if we continue to hike at a 75 basis point, clip, by the end of the year, once a month, right, we should hopefully land somewhere in between, and we're looking for inflation to really taper off. CPE, consumer expenditures, that's actually how much the consumer's spending. That's a huge thing also. That's what we got last week. We'll take a look at that actually. And then another one of the great headlines this last week was Twitter versus Elon. So if you guys are long Twitter, it's just, I don't know. I'm looking at it and I'm like, wow, you kind of have to price in. Twitter typically trades with Snap. Like that's, way back. And don't quote me on this, but you got to think, hey, look, if Elon was never involved in Twitter, what would that stock actually be trading at right now? And to me, that's closer to 30, maybe 25. But Ivy is so high. I jumped in some contracts this morning. Ivy is so freaking crazy high that it's like, dude, you have to get some wild moves on that because I think everybody's pretty much pricing it in right now. Well, that's clearly what happened to me this morning. But anyways, let me see. Steven, can I do a sound check real quick if you're able to talk? I don't know. Let me know. Audio settings. See if I can get this. Oh. Okay, yeah. I think I got it fixed. All right.
Hear me?
Yeah, I hear you now.
Okay.
That was my bad. So I'm just gonna keep jumping in, and so last week we did get non-farm payrolls. That's probably the biggest thing. We can take a look at the charts. Actually, let me do that really quick. I want to get our main one. So main chart. So last Friday we got non-farm payrolls, and that's typically the biggest number of the month. Although with inflation really taking center stage, it's not going to be a huge thing. Well, I don't think it's going to be as big a thing, but you got non-farm payrolls here. It's a fundamental event, right? That creates a technical level. So I always try to mark it on my calendars or on my charts. We also got, what did we get last week? We got PCE, and I want to take a look at too. So last week, PCE was on, we got JOLTS, FOMC minutes. We got the FOMC minutes on Wednesday. So this is Friday, Thursday, Wednesday is FOMC minutes here. And this is really the level that I'm looking at. Did we get CPC? Consumer expenditures? Maybe not. I might be thinking about something a week prior. That's pretty much it. Just the Fed minutes from last week. Alright. So, one thing to note, I've had this, this blue line on my chart. I don't know if you guys can still see it. This is, it's funny. It's anchored VWAP from the COVID lows, and we're just playing with it right now. I've just been watching this thing. It is wild. We're like literally sitting on it at the moment. So I'm kind of sitting back and watching personally before I take any major trades. I feel like this can kind of go one way or the other. Do you have any levels, Steven, on SPY that we want to take a look at? I'm going to move this back to a 30-minute chart. This orange box here, by the way, guys, this is an average weeks range. And so on the upside, this is just standard measurement. This morning it looked like, so we had this gap fill today, which lines up with, what is this line? Oh, that's yesterday's close. So there's a gap, upside gap to 388, give or take.
Yep.
But look at that. That thing just lines up. Ugh. Straight to this kind of blow off top level. Doesn't mean the gap has to fill today. Do we have any downside gaps that I'm not really watching?
I don't think so.
Yeah, I don't think so.
385.50 to like 60 was a level I was watching this morning to go short. Obviously 380 and 375 are still those big psychological levels. I don't know that they're holding a ton of weight right now, but just from
so this is that pre-market low is what you're talking about, 385.
Yeah, and it was also Friday's low.
Oh, is it? Nice. Yeah, man, this anchored VWAP is just like, it's right there. I wonder if people are actually watching it. I don't know, but it's funny how that's playing out right now. Yeah, I'm watching this
Got that level down there too, the 372.50 ish.
Yep. So 372.50. I got like 372.84. So this is the low of this last kind of bounce. So it is technically a higher low. We have a potential change of character, right? But not really. We're in this consolidation. Just to be clear, we have a lower high last week from here, so we don't have an official continuation. To me, this looks like very potential chop. Very, very potential chop here. We did fill this gap earlier. This is our last CPI data. Rate hikes. This is that level, 38, give or take 38.20 on SPY. So this is where we got that first 75 basis point hike right here on the 15th of June. It also, to me, is like right where we broke out after getting the FOMC minutes on, what day is this? Friday, Thursday, Wednesday. Happens to be the level where we broke out here. And if if we wanted this lower high or higher low to hold, I mean, what am I looking at here? I would really want to look for something in this area, I guess. Yeah. Something here for a bounce. Which could be, yeah, kind of like that. It's around 382, give or take. So if that would be a normal kind of like flush below, if that VWAP was a thing.
Right.
But yeah, below this though, and this is entering here is like super high risk. I will say, like entering here is, you'd have to keep a super tight stop, literally at 390 or 380. So it's 2 point, trade like risking two, and then your target would really just have to be at this 401, or 395 in the short term, 395, then maybe up to 401. But I mean, until we can get above this 393, this little level right here, it's gonna be really tough. I think if we see it popping up, man, this level. I mean, everybody sees this level, right? If we break that, that's a quick push to the upside, but I don't need to be long necessarily until we're there. Otherwise, it would be looking for some bounces in this kind of general area for me, but short below, in my mind. Do you have a level you'd be looking for, like a swing short, Steven?
Yeah, at least down to that 372.50.
Yeah. So these blue lines on my chart, we use a strat indicator that a buddy of mine wrote. But so this is the prior week high and low. So 390.20, give it 390.50 is last week's high, and last week's low is 372.39. That's gonna be a level like, look at this double bottom here. If it does break below that, yeah, you're flusher territory.
I'm watching more so that 393.
Yeah. Up here.
As a more significant level just for me. And then to like really get short, 362.17.
Oh, wow. That's way down there.
To get like kind of a double bottom. Dude, my voice is so bad right now.
Oh, yeah. You're back from vacation. Welcome back, man.
Thank you.
Yes, Steven took the annual vacay to Belize. So it's time to make some money this week, man.
Gotta get back to it.
That's what's true.
Yeah.
So if we do break this like 393 level, let's say, an average week's range would take us up to almost 400 on the upside.
Yep.
We're not quite there yet, but again, we have these huge data coming on Wednesday, so we'll get to that really quick. I totally skipped through all that, didn't I? We do have earnings season starting very soon. So last week, have almost slim to nothing from an earnings perspective. This week, we do have UNH and JP Morgan coming in. So next week, we actually really start to ramp up. And I believe next week we start our earnings. Next week we actually start our IVE scores. So if you guys aren't familiar with that, just watch our Twitter or head over to our website and you'll have a look at that. But we have like a hardened earnings trading system. It's freaking amazing. My favorite thing in the world. So just a quick glance at this week, right? So Monday, Tuesday, we really don't have a whole lot of stuff. I did put economic optimism on here. That's gonna be the last Fed meeting. They mentioned that they're watching, consumer sentiment, which to me was kind of new. So we do get consumer sentiment this Friday. We also have like a preliminary, it's an IBD number called economic optimism tomorrow. So I might take a look at that, see how that comes in. For the most part, the forecasts are flat to slightly higher. It was, what was that? It was like, a huge low, right? Like, I think, what was it? 16-month low on consumer sentiment. So, I mean, hopefully that's the bottom end. But what really happens this week is Wednesday and Thursday. So Wednesday we get actual CPI, right, which is inflation. And then Thursday, we get something called PPI, which is, to me, going to be pretty significant. So if you guys remember, consumer price index, that's the consumer inflation number. Producer price index, or PPI, that's what the producers are seeing in terms of their inflation. And if the producers are getting a lot of inflation, well, what do? They pass it down to the consumer. So PPI is more of a leading indicator. And if you guys remember when this whole thing was starting, the PPI number was actually jumping like pretty significant like strides, way more than normal, and that was the first real telltale sign of like, okay, this is a serious thing. It's not really going away. So Thursday PPI, I think that's going to have a big to do really in the market, and obviously most retail is going to be looking at CPI. But again, so today we really didn't have anything. Tomorrow, this is that IBD. All times, by the way, are West Coast times. So if you guys are on the East Coast, apologies, I'm on the West Coast, so you're gonna have to adjust for your time zone. And when I show these screens too, by the way, so there's a previous number and a consensus number. So what we care about is the consensus number. What the market's like, that's what the market's already pricing in. Previous is good to note, but it's not like if something comes in, like if IVD economic optimism is 38.1 and it comes in and the consensus is, let's call it 40, and it comes in at 38.5 as an example, that's higher than the previous, but it's below consensus, and because it's below the consensus, that would be market moving. So the consensus number is what the market is currently pricing in today. Doesn't really matter what something was the last time. It's all about consensus. So I can't be more vocal about that. It's the same thing with earnings. When we come into earnings season, companies may beat what their prior earnings were, but that doesn't matter. What matters is what the consensus is. So it's going to be what's the difference between what the general market is already pricing in, that's consensus, compared to where they're actually coming in at. So Wednesday we get the big number. So pre-market Wednesday we get the core inflation rate. So there's two inflation rates. There's the core and there's the standard. And I always have my rant, but I'll just so you guys know the difference between the standard inflation rate and the core inflation rate. The core inflation rate includes things like food and energy. So gas prices, things like that. The stuff that is our biggest spend, right? The Fed doesn't actually pay that much attention to it, although gas is a serious thing right now, so who knows. And really, I'm looking at the month over month number. So the year over year number, that's the big one that we're trying to change. So we're at 8.6 and the Fed's target is 2. That's pretty far off, right? We're sitting at a 1.5 Fed funds rate, and we need to get to neutral. So we're taking this 8.6 Fed funds rate at 1.5. We need to meet in the middle. We need this number to come down, and we need the Fed funds rate to come back up, and that is neutral. So how long will that take to get there? That's what everybody's talking about, of will this be a soft landing, things like that. If the Fed raises rates too high, well, they're going to cause a little bit of market hysteria. And, are they able to do it, get to this neutral level without causing that general market hysteria? That's what everybody's talking about. So again, I'll look at like this inflation rate. Looks like consensus is slightly higher. If we come in, sub 1%, I think that's going to be cause for stocks to seriously rally, right? And that could be a big thing, right? So if consensus is slightly higher, maybe that, yeah, on the year over year number. And so it looks like they're cautious. This tells me they're cautious. The core inflation rate is looking slightly lower, but the standard inflation rate, including food and energy, is slightly higher. So this core, if this comes in, let's say below 5.5, that's a rally time for sure. Inflation, including gas and stuff. I mean, gas is way higher, so that's probably what that's probably what the difference is right there. So, and then Wednesday is actually Wednesday before close is the opportunity to trade, let's say something like a JP Morgan. So as an example, JP Morgan, I think, is the first Dow 30 component to report. Am I going to swing? Likely. I haven't even looked at it. It's such a small position right now. So Wednesday, at the close, that's when I'll look to, maybe we start finding some of these earnings trades. I know we got the banks, we got Morgan Stanley, Wells Fargo, a handful of others actually coming in towards the end of the week. So while earnings season starts to kick off, I'm probably going to be taking a little bit of a breather on a lot of the day trading stuff if I can. I'm gonna hope to, and I like to do our earnings trades because they're so market independent, right? Typically, this is a choppy time when earnings season really starts to kick off. The general indices will mostly chop actually because everybody starts to move their money around from sector to sector as each group of stocks start to report. Again, so Thursday is when we get PPI. So CPI is going to be the big number of the week for sure. PPI is going to let us know is whatever move that happens Wednesday, is that going to have any legs? Is it going to continue on for the rest of the week? And that's really what it's going to be to me. I think so. PPI month over month. I mean, 0.8 not so bad. 0.5 on the core side, that's even lower than what we were just looking at on the CPI. So the difference between the two, if producer price indexes are coming down faster than the rest, that's good. And if this continues this will probably stay static. If this is the same, it should be, we should hopefully see a little bit of a follow through from Wednesday's move, whatever it happens to be. I forgot to mention too, if you guys don't know, there's this thing called the Beige Book that comes out on Wednesday right after CPI, and Beige Book actually can move markets a little bit as well. So what that is, if you're not familiar with it, it's all the Fed, what do you call it? The governors, Fed presidents, right? So every location has their own Fed, and all the groups get together. They put their own little notes on what they're seeing in the economy, what their thoughts are, and everybody gets their little section in this Beige Book, and it goes to the Fed and FOMC, right? And that is pretty public, but it'll tell the market if people are reading it or the analysts are reading it. It'll tell them, hey, well, how hawkish or how dovish is this group, right? Like, are we really looking at anything over 100 basis points, or where can we set our expectations? They're always trying to pick at whatever information they can, and that is definitely one that they will get some information out of. So just PPI or CPI pre-market, Beige Book comes out kind of like midday, and then PPI Thursday. So there'll definitely be some trading to be had, no question. Swings, again, I would just be super cautious. So David's asking about the Twitter put. Yeah, I probably will. Again, I haven't really looked at it. It's super small. Are the IVE sessions recorded if I sign it? Yes, IVE sessions are all recorded. You get them direct emailed to you guys as well. It's a full system, so you'll get everything that you need. Like there's documents, etc. Friday is a huge day in terms of economic data. Also, though, I don't think Friday is going to be the biggest day. I really think it's Wednesday, Thursday. Wednesday for the major move, Thursday for a continuation, and Friday we get retail sales, we get industrial production, we get consumer sentiment, we get a ton of stuff on Friday. But the truth is, a lot of that stuff that comes out this Friday isn't really moving markets a whole lot. Like if everything was great in the economy, retail sales would move markets quite a bit. It does have some kind of like leading, indication on consumer spending, but again, it's not going to be nearly as market moving as what we're going to get Wednesday morning and Thursday morning. Those are the two biggest days of the week by far. So be cautious coming into those events. And then United Health, we actually get before market open on Friday, which is the second Dow 30 component for the quarter. Cool. This Thursday, by the way, if you guys are in the servers, I'm sure you are. It's not this one. We actually get our homegrown hero, Mr. Jesse, coming in, and we're going to wrap up that current trading series with creating your trade plan. So if you guys get those, take a look for sure. That's going to be a good one. I know a lot of people are excited to hear Jesse. He hasn't really actually done anything with us officially, so that'll be the first one for him. And he's a funded futures trader. So we took a look at SPY. We got some levels, so we're looking, above 393. We can see a nice press to the upside. This will probably be something, we'll see. If it gets up here, that's what we're looking for. For the meantime, we want to just know that this is more of a, call it supply area. if you will, if you trade that. Huh. Which until it breaks completely through, it's gonna be tough. And then your real demand section, like right under 382. And I'm looking at this 382 specifically as the point where right here on the 6th, so Friday, Thursday, Wednesday, it really, this is to me clearly where the buyers stepped in and showed the most aggression. So this is where I'd be looking 382, yeah, 382 for the first 4 bounce, which would be a nice bullish bounce and one more higher low. That would be ideal for your bull market theory, if we get it right. And this is a like very clear level. Look at that, breakdown, couldn't get up, clear resistance, 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 and then boom, breaking out. So this will probably be, honestly, this will probably be our range in between here up to here as your range for the week. Fairly tight. Jeez. Yeah. That's my thoughts right now. Qs, again, very similar chart, actually. Man, very hard to call this stuff. Very, very hard to call. Yeah, I'm looking, Qs, same thing. So you have this breakdown level at 300. That's a nice, like, mental, psychological level. I would just be super cautious, right? If you're already long from some of these areas here, I wouldn't say it's not time to, close or anything like that. From an equity perspective, like, you got a good entry there. But again, we can kind of see the same level. Same level is actually right here. If I took this, right? Yeah, it's 286. That's where they really stepped in last week for sure. So if this is where they bought in, we want to see, are they going to defend this exact level, right? It's a clean level here, 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 286 and change. We'll look for kind of like a 2 to 3 candlestick setup, like a strat setup around that area. And again, your breakout levels above 2, you're just so tight on that. You got that, this is just like major psychological resistance. I don't know that I would want to go super long on the Qs here. From an investment perspective, I'd probably wait for a while. All right. So couple things. I mean, if you want, I'll just go through some of this. IWM, I'm going to skip diamonds for now. IWM, we are actually coming up to that level right now, and it looks like they're failing. IWM is kind of like the black sheep of the family, if you will. So I might watch this guy here. Potential bouncing around here if you're not already short, but mostly bear flags everywhere that I'm seeing. Jeez. VIX 26, that is good. So VIX trading around 26, ideally closer to 20 is where we can be, thinking about swinging some, debit spreads or long calls. I've just been, what I have been looking at. So here's the dollar, right? UUP is the Dixie. This is like the freaking strongest chart in the stupid market right now. Wild. I closed my position there, kind of feeling a little dumb. But I'm looking at gold, just checking in. Man, waiting for this to really start to, I want to see this relationship between gold and bonds change. If not, I mean, I'm very close to this level of going re-short, and that would be down to 57. I'm currently in some longs though, so that not probably just an early trade. We'll see. Let's take a look at some of the charts. So I know we're asking about Twitter. We'll take a look. So Twitter, by the way, is very headline driven, and again, it's you want to be really light in general on something like this if you're not already. The question is, I got in around 24. Yeah, that's fine. Why did cons keep going down? Because of volatility, right? It was this big gap down. It's strictly volatility, and that's, when we do our options accelerations and our option courses, volatility is equally important in terms of contracts options than as price action. So it's just one of those situations where we're getting the direction right. There's no question that we're getting the direction right. It's just a matter of like, hey, if we can get there, look, this is what I'm looking at. 29 right here. This level. It's a big level in the monthly. But it's a poor-ish entry, right? 31. This comes all the way down to here, right? So 31 would be like 31.50 first take profit, and $30 puts. Yeah, it should be profitable at that point. Right now, we're just now breaking below this guy here. So if this flushes below 33, I seriously think it'll be totally fine. This is just, look at this. Look at this hourly chart, dude. That is so gross. Boom, boom, boom. So this was the biggest level right now. And then we get into this kind of congestion zone, which is really the target right in here. Steve, you want to take a look at Tesla? I'm sure we do.
I'm sure we do.
Tesla. So, favorite daily driver. Man, this morning, if you had snagged this short out of the gate, oh, look at how beautiful that was. A little head and shoulders patterns if you guys trade those. Yeah, what did you get in on this? I know I saw you mention it.
That was not me. I totally missed this.
Really?
Yeah, I missed this completely.
So this is volatility, right? Like this morning, I actually grabbed, I think it was a 7. I was looking at the contracts, and like, dude, Tesla's so expensive on a Monday. I think I had to go, it was when they were breaking this daily low here, I snagged like 720 puts. Or not 720, I'm sorry. They were like 600 puts way down there. I'm not in them, not because the trade isn't good, but I'm not in them because I'm doing this, and I know I'm going to have a very hard time managing anything right now. And plus, if you're in Twitter short, you're seeing, hey, look, Monday morning IV is like the most wicked volatility that you can catch.
Yeah, I really wanted those 700s, but it fell out of the sky and it went way too quick.
Yeah, like maybe 700 puts are $2,000. So what that means, if you're looking at contracts, so $2,000 or $20, right, for a $700 put on Monday means that Tesla has to move more than $20 between now and expiration for that contract to keep to the downside, to keep any value. So it has to be below 680, right? Which, to be fair, is well within range. If you look at the daily, so here's the monthly, and this is my analysis view, if that makes sense. So every time I had this, here was my alert. Every time I look to take a trade, I have a view that is actually like multi-time frame. And if you don't, well, it's a good thing to set up. This is trading view. It's just like a multi-screen. So a monthly chart here. I mean, below 6. I mean, that's 620 is pretty far away. So just know, hey, that is a level, 620 to the downside. Weekly, we've got this barcode. It's just a clean barcode, which is very tradable, especially on something like Tesla. Like this sideways chop is between 800 and 620. I mean, that is a big range that you can trade on a very regular basis. And one of the main reasons why we absolutely love trading Tesla. But again, right now it's just it's an inside week so far, so it hasn't broken out. It still could go to the upside. But daily just got rejected right here, right? This was last week's high, 765. Came in just slightly below and really flushed right away. And once you're below 720, this was yesterday's or Friday's low, that's a clean, you're going down and you're going down to really 700, 696. But, like Steven's saying, hey, look, if you're not in it at the perfect time, that volatility from Monday can be super, really tough, right? So 696 or 696, 76, first target on the downside, or major target on the downside. You're very elevated volatility right now. I will tell you, you're below a standard deviation. So those contracts are already inflated. You might, probably do well just to start taking profit. And then below that, 681, give or take 683, 682.50, second target to the downside, all the way down to 650 or 648, which is last week's low. So that would be if this continues, that's exactly what you're looking for on Tesla. You might be looking something like an inside-ish day next or tomorrow, and then that'll be your next trigger, either to go short or long, depending on what it does after. This would be Tuesday, so after Wednesday. My best guess, total guess. Don't take, not financial advice. But yeah, still in this range, man. We can go all kinds of places. We got earnings at the end of the month. Lots of stuff potential. Lots of potential situations there. So, yeah, Tesla coming in right into this 700 right now.
Mm-hmm.
Look at that. Nice trade. Cool. You got another one? I know a lot of people were looking at Roblox last week. They had that huge top, kind of blow off top. Ooh. Look at this. Coming back down 37. This monthly level here, this is going to be, yeah. If Roblox gets below 370, 3750, I would be looking short down at 35-ish. Point of control at 36. Lower, high, little blow off top. Monthly. So here's that weekly view, right? So weekly, inside week right now. I couldn't go long on this until it was over 45, as far away as that seems. Yeah, look at that blow off top. Jeez. But if you get this retrace, that's a nice tradable range. Way down to almost 25. Let me see. I'm going to look at the majors. Apple. So Apple, Apple had a great week last week, right? Apple's strongest week of the year, I think, was last week. Typically, July. Strongest month of the year. So this one, I may look to go long on this, heading into earnings towards the end of the month. Yeah, right now we got a little hammer on the day. If we can break over that 145 and hold at 147.40 is last week's high, and then you got a monthly level at 152. I know a lot of guys were looking at the 150 calls, short dated, but that's how I'd play this kind of stuff right now. I'm just gonna take a look. So GDX, I do have two trades. One like gold and the miners, looking for this bounce, right? Anything bouncing around 26.50 to me is still good. We have not taken out these lows. Below 26 is my stop, and I'm just now starting to really like position here. I just feel like it's a lot of headwinds here. Let's see, this quarterly level's a little funky. Either way, I guess this could go to the south side. But look at this. This is like, I guess we could have a big time fair value gap. Oh, jeez. We'll see. Hopefully it doesn't take another leg down. But if it does, we'll be ready for it. GLD, similar. We're right in here, very close to going short. Not quite. 161 is my level. Double top. Yeah, if it bounces, this is where it's going to be, right here. 161.20. Literally right here. Alright, I think that's good for now. Anybody have anything they want to take a look at? So again, biggest days of the week, Wednesday, Thursday. That's where we want to be. Tuesday, 382 for me. That's really the level I'm going to be eyeing for potential bounce if we want to stay bullish on these indices. Very, very possible. I like seeing the VIX below 25. We're very close. It looks like it could happen. And just keep an eye on some of the inflation trade, right? Like watching for gold and miners to really reverse. Oil looks like it's heading back up. We are still above the 200-day, and I am still. Oh, that's the one I didn't look at. Oxy. So I started loading Oxy last week here at the close. I'm below, but this is my 58.50 real like level, and that tags right here to this mark and this entire point of control for this section. So I would short below 58.30 but I'm not looking to go short yet. That's where I am, boys and girls. Cool. All right, we'll see you out there. Quick break for me, and then I'll head into the servers and start trading for the back half of the day. And that is it. Well, we got some Wolf financial stuff this week too. If you guys do that, so I think it's twice on his podcast. How do I do this? Wolf. Yeah, I think we're here Tuesday. Power hour. I can't see it. Tuesday. I saw this little green guy. And then Thursday morning. This is our Eastern. So, see you guys over there later on. And for now, stay safe and enjoy. Adios.
Sounds good.